Mortgage tip number 11. Now that you've decided to get serious and refinance or purchase that home, there's some do's and don'ts. And these will really help your process be so much easier that I felt like I should address them. Number one, do be patient. You know, when we're collecting documents, sometimes there'll be multiple asks, and a document you supplied may not be sufficient, or it may not solve the problem, or it may create another issue. Be patient. The loan officer is just trying to do their best to service you and get your loan closed. Patience, patience, patience. Number one, don't. And I'm not saying these in specific numerical order, but a big don't. Let's call it a big don't. Do not quit your job after you go under contract or if you are in escrow on a refinance. Don't do it. Oh my God. The stories any loan officer could tell you. I mean, I had a borrower quit their job the day before we were set to fund their loan. You guys, that's like a big deal. You no longer have income. This loan is possibly not doable any longer. Do not quit your job. Please do not quit hang in there until the transaction is over. Do not quit your job. Um, and something else has happened too during these COVID times, and this one is really outside of your control. Don't get fired. We've had people who lost their positions as a result of COVID and their company downsizing. And again, it doesn't always mean the loan is not doable, but now we have to stop and go back and re-underwrite that loan and see if you can still qualify. If it's a husband and wife, we've been able to qualify with just the wife. We've been able to get real creative and find ways to, help people qualify when their income circumstance changes. But really, if you want a smooth transaction, don't quit your job. The next one is don't go out and buy don't buy anything that requires credit. Don't do it. Don't do it. I know you're in escrow to buy a house, or you're doing that home improvement loan, or cash out for home improvement, and you've seen a couple items you want to pick up until the transaction is closed. Let me explain what closing means. That doesn't mean I've signed docs, therefore I'm done. That's not what happens. You guys, what happens is that the underwriter and funders can do what's called a soft pull on your credit. So even if you think, oh, I'm done, no one will know, we'll know. You don't know the dreadful call. There are a couple calls you don't want from your funder on the day of funding, and our underwriter, and one of those is there's some new accounts showing on their credit. Because now we have to go back and verify whether an account was open. If an account was open, now we need documentation. Now we have to add it to your debt to income ratio and hope you still qualify. We've had people sign loan documents, and even though we had this conversation with them, they'll say, oh, I thought we were done. We are not done until it's funded and recorded. Until it's recorded in its respective county, you're not done. Don't do it. That's a big one. And another don't. A big do. Let's do a do. Communicate with your loan officer. If you have a family trip or vacation plan, or if you're having surgery, if you're not going to be at work for any time period, for any reason during the transaction, communicate that. It makes a big difference. We've had borrowers have trips to Europe planned and not communicate that. And now we're trying to get conditions, and they are across the pond. And they're frustrated because the transaction didn't close before they left, but they didn't communicate that they were leaving. Communication with your loan officer about major life events that will occur during the course of the transaction are important. So communicate. A don't. Oh my God. I remember being a young loan officer and having this happen to me. I had a loan. It was already approved. the borrower submitted their conditions, are conditionally approved. Let me use right words. Conditionally approved, because it can only be conditionally approved until all conditions are cleared and it moves into approval status. So we got all their documents in. We were clear. We got all the documents we needed from escrow and title. We were clear. Only thing we were waiting on was the appraisal. And so the loan to value on the loan was low. So we weren't really worried about if the value would come in or any of those sort of things. It was just a matter of playing the wait game. So the appraisal comes in. My manager calls me and is like, Shanee, we have a big problem. And I'm thinking he's joking, like, yeah, what are you talking about? The appraisal came in. We're good. We're ready to close, right? And like my manager was a jokester. So I just thought he was pulling one over on me. And he's like, no, Shanee, we're not good. The appraisal came in subject to. I'm like, subject to what? And then like we're looking at the report and yeah, the bathroom's not there because they started work ahead of time and some kitchen cabinets were missing and some walls had holes in them. And guys, don't do that. Don't do it. Do not start any construction projects before you close a transaction, even if the transaction is for construction. You know, the other thing that people do is they underestimate the cost of construction. So they'll start a project on their own, not have enough cash to finish, and then they come to us in the middle for a loan. This is a problem because a lender will not lend on collateral that's not complete. The appraisal needs to come back as is. When it comes back subject to, that work has to be completed before we close escrow. I had to go back to my people and say, okay, what's going on? Fortunate for them, they were able to get the work done, but the loan was delayed for weeks. You know, and delaying the loan like that could even cost you your loan lock. It could cost you your rate. It could cost you an extension fees. So do not start the construction. Don't do it. And, you know, I think those are some good do's and don'ts. The stories I can tell you behind the do's and the don'ts are, they're funny now. They weren't funny then. And they cause high anxiety. You know, and a lot of people say that their transaction was bad. It was bad for some of these reasons. Oh, there's one more I want to cover before I let this go. Do not deposit mattress money into your account. Don't do it. Don't do it. All funds deposited into your account have to be sourced and seasoned due to money and anti-money laundering laws. So if you deposit cash, we have to know where the cash came from. And you don't understand, like I've had deals where we were ready to close. Their bank statement showed they had $500. However, when it came time to close escrow, they needed $4,000. So now I need a transaction history or updated bank statement to source those funds. And we get the bank statement and there's $12,000 cash. And you're like, where did this money come from? Oh yeah, it was in my mattress. I took it out the freezer. I took it out my safe. All those sources are not good. So when you're depositing money in your account, make sure they're sourced and seasoned. And that's simple. If it's a gift, we're going to need a gift letter. If it's a large sum and you don't need to deposit it, don't deposit it. If you need to deposit it, talk to your loan officer so you guys can determine how to do it in such a way that's not going to be a disruption to your loan. So that's mortgage tip number 11. I hope you guys are enjoying these tips. And I'll see you tomorrow. Bye.